Good morning, friends, and welcome to the Money Minutes. We're going to introduce to you today Mr. John Moakler. Mr. John Moakler is an expert, he's a coach, and he's also a mentor to many financial advisors across the country in Canada. So welcome, John. Welcome to the Money Minutes.
Thank you very much.
Good to have you here.
Glad to be here.
Absolutely. So I know so much about you, but I want the audience to hear from you what it is that you're very passionate and very proud of in your professional life.
Well, I have a foundation because I started off in the computer industry, and I have a math and computer science degree from Waterloo and a business minor from Wilfrid Laurier, and I worked in the high-tech industry. I worked for hardware companies, software companies, services companies, and then I did a startup software company where we went back to the basics. So it was like three or four of us that started the company. We got financing in place, we built up the company, and then we ended up selling the company to IBM in New York.
So anytime you start a business, you sell a business, there is always learning that comes out of it. What is one thing that you still live with from that experience?
Well, you keep learning because you have your set ideas sometimes when you come to the table, and then you get surprised. And when we started that company, it was really a software company in the data center space, and clients were taking our software and using it for other purposes that blew us away. And so we were able to really position ourselves as the autopilot for the data center. That was our marketing message, and we did quite well doing that.
Absolutely, and you must feel very proud of that.
I'm very proud of that, yes.
All right. Now you're a very successful financial planner, and I know you specialize in working with doctors.
That's correct.
So tell us more about that.
Well, when I left the high-tech industry, I wanted to take a pause and I wanted to own my own business and grow it. And I also liked coaching, so I decided to join a very large mutual fund company. And right into it, I got my risk management or my insurance license. And so I was creating what I called full financial planning, holistic plans. And so I would build a lot of risk management around it, help them to grow, protect the family, a lot of wills and estate planning. And then I went back and did my CFP, which is the gold standard, Certified Financial Planner designation, but I also did my CLU, or Chartered Life Underwriter designation. So the CLU isn't as widely known, but I actually got more value out of the CLU than I did the CFP, and that allowed me to work with a lot of small business owners, and that's when I transitioned to working with medical doctors.
Absolutely.
Correct, because when I build a financial plan, I'm trying to build something that is bulletproof, because life will throw you a curveball. Whether you're in a car accident and you can't work for a period of time, how are you going to pay yourself? If all of a sudden, because nowadays, 30 years ago, when someone was diagnosed with cancer, 80% of the people passed away and 20% lived. That's switched around today. Now 80% live, but the disability isn't paying you because it's a critical illness. And so you've got to make sure that you have the right type of coverage and the right amount of coverage in order to make sure that you can continue on with life.
Absolutely. So John, you work with many, many clients, and these clients are professionals, they're doctors, they're physicians. Is there a story, without mentioning any name, that you can share with our audience today?
Yes, I can remember back to, turned out to be a dentist who came to one of my seminars back in the beginning of 2012. And at the end of the seminar, he came up to me and said, "Wow, you're fantastic. I've been to 15 of these over the last year. You really know your stuff." And I thought to myself, okay, a guy who loves to go out and have a free dinner at a dinner seminar. But he said to me, "You know what?" He goes, "I'm looking for someone I can trust. I need to meet with you." He said, "I'm 70 years old. My wife is 50 years old, but we've been married for 20 years. I have a 10-year-old and a 14-year-old, and my cancer's come back, and I've given less than a year to live, and I need to put a plan in place. I have nothing in place." And so we sat down. He turned 71 that year, and so what I did was I looked at all of his insurance coverages, and he had two types of insurance coverages, life insurance. He had a universal life, and he had what was called a term to 100. The universal life had some cash value in it. It was personally owned. The term to 100 didn't have any cash value, so we focused on that particular policy. And the accountant had never seen the strategy before, but I learned it when I took my CLU. And so what we were able to do was we had to get permission from him to get access to his medical doctor, all of his palliative care doctors. We had to get a company involved to value the value of that insurance policy. And we turned around and we were going to sell it to his dentistry professional corporation. Now, by doing that, because he had a limited life expectancy, it was a good news, bad news information, because the $1 million death benefit came back at a value of $980,000. So what that meant was we could sell that term to 100 policy to his professional corporation and take out $980,000 tax-free, because we're selling an asset.
And then this policy pays again when the person passes away?
Correct. So now we changed it from him being the owner and his wife being the beneficiary to his corporation being the owner, his corporation being the beneficiary, but his wife was also a shareholder in the corporation. So he did pass away in January of 2014, and so the $1 million was paid into his professional corporation, which creates something called the capital dividend account of $1 million, and then his wife can then take a capital dividend and take that $1 million out. So that strategy allowed it really to be paid twice in 1 year. That was very exciting. He was blown away by that.
And you actually helped his family because he told you he didn't know where to begin with planning.
That's correct. What we did was he was worried about probate on all of his assets. So what we did was we went through every asset. Like he owned shares in a smoked salmon company in the Maritimes, for example, that his wife wasn't on. So everything that he owned, we made sure it was co-owned with his wife, which made it a lot easier when he passed away. We really didn't have to probate his will because all the assets were jointly owned with his wife and they all moved over to his wife, thereby avoiding the 1.5% probate fee.
Right. And these are some of the strategies you learned through your CFP, CLU that you're helping your clients with.
Correct.
That's amazing. That's really nice. I have a question for you, John. You mentor a lot of financial advisors, and obviously you also have only 24 hours in the day.
I tried to stretch it.
But we have a lot of financial advisors that are watching this interview. Do you have some tips for them that they need to put into their practice to be successful? How can you mentor them without being there?
Well, you always want to pick clients that you enjoy working with. So I would say don't try to pick a client that's going to be difficult to work with, that's closed-minded. So you want to find clients that you can work with. The other thing is don't use a scattergun approach. I've used that throughout all of my career to see what stuck up against the wall. Focus and target market. If you like to work with lawyers and accountants, do that. If you want to work with professional business owners, do that. If you want to work like myself with medical doctors, then do that. Because you've got to...
What's the benefit of having a niche market?
Well, it's the knowledge. You then become aware, and through the marketing that you do, that people become aware that you are knowledgeable in that area. You become what I call the preferred provider of the solution to that particular target market.
Right. And it's important to be that expert, isn't it?
That is correct, because in the case of doctors here in the province of Ontario, they were only allowed to incorporate in the last 15 years, and then they were allowed to bring on their spouses and adult children. Now the federal government has changed some of those rules. So I've actually developed strategies to not go around those new rules, but to augment them and still try to come up with strategies that will still allow them to meet their goals.
And you work with your mentors with these clients as well. So I could come to you as a financial planner and say, John, I have a doctor and I want to work together with you. I can access you that way.
That's correct. That is correct. Now, what I did was I actually wrote a book. So when I left the mutual fund industry and started my own company in 2014, I decided to take my very successful dinner seminar series that I do for physicians. I probably had over 5,000 physicians attend my seminars over the last 10 years. And I wrote a book called Heal Thy Wealth.
Is that the book?
This is the book right here. So Heal Thy Wealth.
One of the bestsellers?
It is on the bestsellers list now. So how doctors are misdiagnosing their own financial health and what they can do about it.
Absolutely. And congratulations on the book.
Thank you.
Congratulations on having your own practice, yet a business of helping people.
Correct.
Ultimately, what you're doing is you're getting physicians, top 1% of the country, that basically have no time, to look after their own financial health.
That's right.
And you provide that with expertise.
That's correct. I actually have a first aid kit that I developed for doctors. So So there's tools.
Tell me about
There's
that.
tools in the first aid kit. Well, there's a monthly lifestyle expenses, and it's really interesting. Sometimes with doctors, they have so much money coming in. Sometimes they don't realize how much they're spending. And there's this one doctor that I started working with back in 2014. When I sat down with the family, they said, we're spending X dollars per month in monthly lifestyle expenses. But when I looked at how they were paying themselves, it was 3X. So instead of it being like $5,000 a month, it was $15,000 a month. And it blew them away. They didn't realize they were spending that much. And that was their retirement money. So we were able to bring it back over a period of 3 months to a more realistic monthly lifestyle expenses so we could plan for retirement.
Absolutely. And these are small tips that people can live with for the rest of their lives.
That's correct. And inside that toolkit, I also have an estate planning questionnaire that helps develop the wills and estate planning, because if you own a corporation, in addition to your personal wills, you should always have what's called a secondary will or a business will. And the reason you do that is that if you don't have that business will, all of the assets inside your business will flow through your personal will and get hit by probate, which is a public process. By having that business will, all those assets stay intact, they don't go through probate, and your business will determine where those assets go.
And you know, it's not easy sometimes. We are living in a world where families are not as nuclear as we would want them to be. People have had second, third marriages
Correct.
and children from previous marriages, and you don't want everything to be public at the end. John, I am having a great time. I also had a great time reading your book. And there are 20 questions that you ask doctors to ask themselves before they deal with any financial planners.
That's correct. So in the book there's 20. Usually in my dinner seminar I take them through 13, but in the book there are 20, and they can turn around and use those questions to make sure that the financial planner is actually working in their best interest and not just the bottom line of the financial planner. You shouldn't be afraid to ask your financial planner, how do you get paid? Because sometimes I find that how you get paid can sometimes dictate your behavior, and you want to make sure they don't have any conflicts of interest. And so these 20 questions will help flush out, is this the right financial planner you should be working with? Are they going to take care of you and your family, or are they just looking to try to make money off of you?
Absolutely. And all 20 questions basically will make everyone think about what it is that they need to do before putting a financial plan together.
That is correct.
It kind of covers everything, all aspects of life.
It talks about your lawyer, it talks about your accountant, it talks about risk management, it talks about your goals in life, everything. It's all holistic.
So John, the Money Minutes is a program where we offer free services, free tips to our audience that they can put into their life and be financially free, but have a little bit more control over their financial life. So what are the top 2 tips that you would have for our audience today?
Well, if I'm talking to a financial planner, the top tip would be get educated, because you need to have a foundation. If you're going to call yourself a financial planner, you need to have a designation. And you and I are both part of a very important organization called Advocates.
That's right.
And Advocates is really there for financial planners, but yet only 25% of the financial planners in Canada are part of Advocates. So we've got to change that. And so you should get your CFP or your CLU. We've now come out with a new designation that's a little easier to get, because the CFP is kind of tough to get at sometimes. And so we've come up with a new designation called the PFA, or Professional Financial Advisor. It's about half of the effort of a CFP, but you now have a designation, and you'll be able to call yourself a financial planner. So certainly education. In the case of working with clients, you got to make sure you put together a written plan that covers all aspects. Because if I'm talking to clients, the top 2 things they should look at is make sure that your financial planner is independent and that they can recommend and build a plan for you, and that they're offering products outside of the company that they're just working for. And the other thing is 7 out of 10 doctors I sit down with, it's probably not just doctors, probably 7 out of 10 Canadians do not have a will. And so if you're going to be moving forward, you got to make sure that your family is taken care of should life throw you a curveball.
So for financial advisors, education is very important. And for Canadians, having a will and having a financial plan is what John says is very, very important.
That is correct.
Now, John, if our audience or financial advisors out there, they want to get in touch with you, what's your phone number and email address they can
Well, they can go up to my website. It's moaklerwealthmanagement.com. So Moakler, moaklerwealthmanagement.com. And the office number is area code 416-840-8544. And there is a lot of information up on my website that talks about the various risk management products, talks about how you build a financial plan, and there's a lot of customer testimonials out there. It took me a while when I first started working with doctors to actually get them to publicly give me a customer testimonial. And so I have a number of doctors. In fact, in my book, Dr. Ralph Fullman wrote the foreword, and Ralph was one of my first doctor clients back in 2009, and he didn't want to incorporate. He just didn't believe that was the direction. And he ended up, moving down and retiring, and now having read my book, because he read my book in order to write the foreword, he goes, geez, I think I should have listened to more of your advice than I should have. And so that was very nice that Ralph had said that. But Ralph is continuing to work. That's the thing about doctors, is that, when I ask them, tell me about retirement, they say, okay, instead of working 5 or 6 days, I'm going to work 2 or 3. Well, if they're going to be working 2 or 3 days in retirement, as long as health allows them, and Ralph is in his 70s, they're going to be in the highest tax bracket. So you better make sure you put a plan in place that allows them to minimize the amount of taxes they're paying in retirement.
And John, you said a very important thing. A public testimonial is a very personal thing.
Correct.
And it's a huge responsibility. So if you have testimonials on your website and you have doctors writing about you, it tells me that you have done your homework, you have the expertise, and you're doing a great job out there. So I would recommend you to anyone that I know.
Thank you very much.
Thank you so much for being on our show. Thank you for helping our Canadians today. And I'd love to have you again sometime.
Thank you very much. I really had fun. Thank you.
Thank you.